morning, Trinidad and Tobago, and welcome to the Bourse Report. Today, we take a look at the first quarter performance of two of the regional insurance giants listed on the Trinidad and Tobago Stock Exchange. And we speak, of course, about Sagicor Financial Corporation and Guardian Holdings Limited. Turning first to Sagicor Financial Corporation, or SFC. And for the first quarter ended March 2018, Sagicor reported fully diluted earnings per share of just around 43 cents, a 16.5% increase from the 37 cents reported in the prior comparable quarter. Driving this impressive growth was an 11.7% increase in net premium revenue at the top of the table from 1.13 billion TT equivalent to just around $1.27 billion, offset to some degree by a decrease in net investment income from 778 million to 740 million, or a 4.9% decrease. Net income for the period increased just around 44.2% from 182 to 263 million dollars. And net income attributable to common shareholders increased actually 58%, and that's from continuing operations from 83 million to just around 132.6 million. So commendable performance by Sagicor in the first quarter compared to its previous quarter. And as we can see in terms of revenue by source, there has been a continued upward trajectory over the last 3 quarters. Indeed, the ratio of net premium revenue to net investment and other income has also remained relatively constant at about a 60 to 40% split between net premium revenue and net investment and other income, with a nice upward trajectory, as you can observe. In terms of the segments or products and services which impact Sagicor the most from a revenue perspective, we would note that life, health, and pension annuities for both individuals and group remain the lion's share in terms of revenue generators for Sagicor Financial Corporation, and that's highlighted in the purple and the blue bars of each column. And as you can see, nice upward trajectory. But important to note, there has been continuous growth across all of its products and services, regardless of what size of the revenue component it has been for Sagicor over the past 3 comparable quarters. So at a price of just around $8, Sagicor is trading at a price-to-earnings multiple of around 5.3 times, well below the sector average of 12.6 times, and offers investors a trailing dividend yield of around 4.3%, above the sector average of 3.1%. And a metric which is sometimes observed is the market-to-book ratio, and we can see that Sagicor has a market-to-book ratio of around 0.57 times, below the sector average of around 1.4 times. And typically, the lower the market-to-book ratio means the more attractively priced or value the stock would offer to investors. So on the basis of reasonably attractive valuations and a positive growth trajectory, Bourse maintains its buy rating on Sagicor. Turning quickly to Guardian Holdings, a slightly different story. Guardian Holdings Limited reported earnings per share from continuing operations of 31 cents per share. That's a 20% decrease from the prior comparable quarter of 39 cents. Now, admittedly, Guardian released their results and mentioned that certain accounting changes would not make for a like-for-like comparison for comparable periods. Nevertheless, we take a look at some of the major changes that would have occurred. Net income from insurance underwriting activities would have actually increased some 77% from $102 to $182 million, but this was more than offset with a decline in net income from investing activities of 32%, falling just around $89 million from $278 million to $189 million. A higher taxation effective tax rate would have also weighed on earnings performance, leaving profit for the period after tax at just around $72.5 million, down from the $90.5 million in the comparable or relatively comparable prior period. In terms of net income by activity, we can see that after a significant reliance on investment income in the purple for the last 3 quarters, the most recent quarter would have seen a significant shift in the proportion of total of net income generated by investment income. So typically in the last 2 or 3 quarters, it has been around a 70-30 split. Now it's just around 50-50, with net income from insurance underwriting activities playing a much more critical contributor to its overall net income. And similar to Sagicor, GHL's operating profit by business line is One of the major contributors remains life, health, and pension business. As we can see, there was an upward trend over the past 3 comparable quarters, and in the most recent quarter of 2018, there has actually been somewhat of a decline, but again, that has been offset to some degree by improvements in the property and casualty business. So at a price of just around $17.18, Guardian is trading at a price earnings multiple of around 10.2 times, below the sector average of 12.6 times, and offers investors a 3.9% dividend yield above the sector average of 3.1%. Of course, on the minds of many investors is the potential takeover by NCBFG of Guardian, and we are anxiously await to see how that turns out, and what, if any, improved offer, or if any offer at all, comes back to acquire a majority stake in Guardian Holdings Limited. So on the basis of reasonably attractive valuations, but with a decline in some of its earning potential for the most recent quarter, Bourse maintains its neutral rating on Guardian Holdings Limited. That's it for this week's edition. For more information, give us a call at 226-8773, email us at invest@boursefinancial.com, or visit our website at bourseinvestment.com. Have yourselves a great investing week. This has been the Bourse Report.